webinar, actually, how to acquire a dental practice. We have a number of attendees on the call already, so we're going to go ahead and get started. First, a little bit about OMNI. OMNI Practice Group has been around since 2004. Primarily, we began in the West Coast, up in the Northwest in Seattle, Washington, and we've since expanded, and we cover all of the West Coast, as well as we're now in Ohio and certain other states on the East Coast. And we can actually do buyer's representation throughout the United States and some consulting work as well. So I started OMNI about 15 years ago. My background's in accounting, finance, and real estate. And we've helped over 300 some buyers and sellers with practice transitions, starting out again in Washington, but we've done practice sales in Texas and Florida and Arizona and the East Coast and all over the place. So, we do a lot of speaking and seminars. We've done those at local and state national conventions and things like that. And with us speaking today on the webinar, we have Corey Young. And Corey graduated from The Ohio State University and has over 20 years of experience as a dentist and a practice buyer and an owner. So he's got the bruises and scrapes to talk about on being a practice owner and acquiring a practice. And Corey has an MBA from William Howard Taft University, and he's also an accredited business appraiser, which we actually have 3 accredited business appraisers in OMNI. And he's a member of the American Brokers Association and the ADA and Ohio Dental Association. And then we also have Megan Urban, who's down in Salem, Oregon. Megan graduated from Kansas University, and she has a plethora of experience, about 25 years to be exact, in the dental industry, ranging from being a dental assistant to dental consultant and now dental broker. And she works a lot, has worked a lot with buyers, helping them locate and transition into a practice, so she has a ton of experience to talk about. And she was a regional manager of a large dental group here in the Northwest not too long ago, and she's a licensed broker in Oregon right now. So we're going to get this webinar started, and some of the things that we're going to cover are what to look for when buying a practice and valuing a practice. We're going to talk a little about practice values and different methodologies and things like that. Red flags to look for when buying a practice. Some of the good and bad things to look at in practices, and a whole bunch of other information. And so I'm going to now turn it over to Corey.
All right.
And he can go ahead and get started. So Corey, you there?
I am here, Rod. How's everybody today? Rose, if you get me to that Trends in Dentistry screen, please.
Okay, 1 second here.
There we go. Thank you. All right. So this is pretty straightforward here.
And a little technical difficulty.
Got it all right, Rod? All right. This is pretty straightforward here, and I think for everybody who's been in the industry, this seems somewhat self-apparent, but big thing to take from all of this is the demographics are really changing. Back when I graduated from dental school, even back in '96, that was only 40% of the graduating dentists were female.
Okay,
so it's,
Corey?
Yeah.
You can, are you there?
I'm here. Are you not hearing me, Rod?
1 second, folks.
You're all good. You can keep going.
Okay. Weird things can happen here in Ohio, so bear with me. So also going on with the growing number of female dentists, you know, we're seeing a lot of dentists graduating now who don't have any intent of owning a practice. And that's a big change from back 20, 30 years ago. Virtually everybody was going to buy a practice back in that time frame. Corporate dentistry is growing. This used to be almost non-existent Now, there's a lot of corporate dentistry out there, as you all well know. Multi-practice owners are growing out of necessity. Insurance reimbursements are going down. And this is going to be a constant battle for dentists. The insurance companies will take any avenue they can to keep their costs at a minimum. Healthcare Act definitely affected dentistry, mostly in the sense that a lot of people who weren't insured ended up being insured because of the Healthcare Act, and that affects your patient base. And of course, practice dentistry is really now the business of dentistry. Not that it ever wasn't, but it's becoming more so as time goes on. All right, Rose. Great. Trends we're seeing, practice transitions right now. It is still a seller's market. I know at some point that's going to change. Nobody knows when that's going to change. Number of dentists retiring is outpacing the graduating dentists. Realize that you go back in time 30, 40 years, they used to kick out a lot of dentists, more than they do. That's a fallback from the Johnston administration, but that's a discussion for another day. Graduating dentist average debt load keeps on going up. It's up to $265,000. Bank financing, it's gotten tighter, but still very doable right now. Good practices do sell quick. And more practices are selling that include real estate. All right. Are you ready to buy? Here's a great question for everybody. Have you been out of school at least 2 years? The banks want you to be out of school at least 2 years to get a loan. Is your hand speed steadily improving? This one I can't stress enough. You know, if you're in a situation where you're working as an associate, work on your speed constantly. If you get into a situation where you find a practice you want to buy, the banks frequently will want to see proof of your production to prove that you actually can do the dentistry you're saying you'll be able to do. Can you qualify for a bank loan? Most likely you can. Banks are really willing to work with it, and we have a lot of avenues to get that done. Have you managed a staff before? Don't be scared in your situation you're in to step in and take on some roles. This will help you later on when you own your own practice. You know, down to the can you wear many hats. When you own your practice, you have to kind of be able to do everything. HR, marketing, PR. If it's not you, it has to be somebody you're hiring out or a spouse who can con into doing such a thing like I did. Educate yourself on accounting, HR, marketing, etc.
There are definitely pros and cons to starting up a practice versus an existing practice. I think one thing that's super important is really that top line, willing to accept that a practice isn't perfect. Nothing is perfect. So the big point is going in with your eyes wide open, knowing what is happening and what the potential is. So a lot of the things that are really great about buying an existing practice are the current cash flow, which is going to help you pay off your loans, and start saving for needed equipment and technology. You've got a seasoned staff there, hopefully, that know what they're doing and the patients like them. And along with that is they have some solid systems, you know, in place. And if they don't, again, they're never perfect, you know, at least you'll start to learn what there is going on so that you can look at the opportunities to improve things as you go along. Buying an existing practice, again, you have a patient base, you have people coming in your hygiene, you have, which means you're diagnosing treatment. And obviously, like we said, you start with more money. And so you're going to be able to pay off your practice loans sooner. So with buying, starting up is not for everybody. Starting up is definitely for folks who are pretty tough. Because you don't know, you know, you can do everything right, but you don't always know what's going to happen. And I don't say that to scare you away from potentially opening up a practice, because that can be a great thing too. But, you know, again, talk with your trusted advisors. When you do go into an existing practice, there can be older equipment. Honestly, that's not always a con, because you can, you know, sometimes talk with your bank and get the additional funding for the equipment and technology that you need. We're not talking about your Christmas wish list, but we have to get you in there and sit your rear end down and start producing. There can be bad habits and systems and hidden skeletons, but again, those can be cons. But again, those are things you can certainly overcome. Rose. I can't stress enough assembling your really A team. I know that buyers and startup folks, dentists are concerned about finances, and rightly so. But if you start on the right foot, it's just priceless. And so it's important to start with a really good accountant that's going to help you keep more of the money that you earn, and they're going to help you, especially at first, to say, hey, how much of your purchase price is allocated to goodwill versus equipment, which are all taxed at a different rate. Your attorney is going to do a lot for you, and a dental-focused attorney is super important. I just helped a dentist buy a practice that his dad is an attorney, and he helped with some things, but he's just not dental-specific, which he understood. So we brought in a dental-specific attorney to help, too, because we've seen the things over the years, what goes well and what doesn't. And so we want to keep everybody out of those bad positions. Getting a really good consultant and broker is priceless, too, because it helps you go in and fully understand what you're buying, and then also potentially help you get started past the moment that you pay for that practice. What do you do once you walk in? And how do you keep on top of all the numbers and all the benchmarks that you need to keep in track of? And a banker is super important to be dental specific too, because they do understand the business. And it's good to get a good relationship with them from the beginning and find somebody who's going to give you a good deal, but also that you get along with, that you want to have a lasting relationship with. Because, again, at some point you're going to want some equipment and technology or a building or a remodel, and so it's good to get a good banker there. Rose.
All right, steps to buying a practice. The very first one here, determining geographic area you'd like to practice. This is one I think everybody needs to do soul searching on, because there's trade-offs here. You obviously need to feel comfortable where you're going to go practice. It needs to feel like an area you can spend some time in. You also, you have to weigh in factors. Are you willing to commute? How far are you willing to commute? How long are you willing to commute? Traps that I see a lot of dentists get into is they fall in love with an area and they're going to practice there no matter what. And the problem is sometimes when that happens, you'll find out that the population ratio is something like 1 to 1,000. That doesn't mean it can't work, but you're going to have a very competitive market to take on. Marketing is going to be a huge concern. But doesn't mean you shouldn't do it. But it's all a weighing of the factors between how tough is it going to be to make it work where you're going versus where you want to live, how far you're willing to drive. So once you got that figured out, you can search for practices. You locate the practice, sign a non-disclosure, which we'll kind of go over a little bit later here. Receive and analyze the data, demographics, etc. You will see a whole lot of reports that you need to look at. Actually go and visit the practice. You like what you see, you can make an offer via letter of intent. This is a non-binding agreement, but it stipulates the good faith intent that you want to buy, the seller is willing to sell it to you. You start working with the bank, like Megan was saying, hopefully a dental specific bank, because they know what they're talking about, they know what they're used to looking at, they know how to work with you. Perform due diligence. It's going through, making sure all the numbers, the reports, as the practice management software will show, is what it says it's supposed to be. You'll eventually get a contact an attorney to start the legal work. Again, dental-specific attorney is a very good idea. They're used to working with this. They know the problems that can pop up, and they're used to working around it. Negotiate a lease, and you close on the sale of the practice. And one thing, I just laid all this out, is 1 to 11 as we have those steps. There's always bumps in this road, and that's one of the roles that the brokers take on, is we help get through the bumps. I I don't know if there's ever a transaction that goes 1 to 11 just smooth as can be. They happen, but more often than not, there are bumps to get through. Okay, Rose. Where to look? You can look with us. Hey, practice brokers. We have listings of practice for sale. The various state dental association publications will have want ads in their practices for sale. Dental Town, other websites, great sites to look for practices for sale. Alumni sites, usually your prospective dental school that you went to will have some form of a site to go to where they will let practices be listed and you can look to see what's available. Study clubs, another great list. County dental associations or local dental associations depending on your state. Those are great resources as well. Okay, Rose. Working with brokers. Not all brokers are created equal. Some brokers get into it with very little experience in the dental field. They're used to just working strictly with real estate. Some guys get into it from being in dentistry and really they understand the dental part, but they don't understand all the nuances to brokering a practice. Dual representation. This is a real sticking point with us. As a group, OMNI, we pretty firmly believe you can't adequately dual represent both parties in a transaction. It's something called agency, and at the end of the day, I don't believe you can really look out for both the seller and the buyer at the same time. You're really looking out for one or the other, and usually if you're looking out for one or the other and if it's the seller first, they're really looking out for the seller. Non-disclosure agreement. They're going to make you sign a non-disclosure agreement. Take this seriously. The seller's practice could really take a hit if word comes out that they're selling. That's a good excuse for patients to leave. That's a good excuse for staff to leave. They will get very upset if you break the non-disclosure agreement. Requesting information, you should be able to get any information that you're asking for. If you see you're getting stonewalled with this is a bit of a red flag. And again, know who they work for. This comes back to the agency. Some agencies, some firms will take on buyer representation like we will. If you're ever worried that somebody doesn't have your back, we're always willing to do it. Okay, Rose.
Right here we're going to talk about the different options for what we might consider an ideal practice location and an ideal practice. So generally we like to look at, and again, these are kind of standard benchmarks. They're not the only thing. They're not the only way it works, and it definitely depends on if you're a GP or a specialist. Here's some general benchmarks to look at, and that's that you have approximately 1,800 to 2,000 active patients per dentist in the practice. It's always good to look at area demographics and look at the percentage of homeowners to apartment dwellers. It's also important to look at the household income, and especially if you're considering starting up, those are definitely bigger things to look at. And depending on, again, if you're a GP or not, majority of the age group in the 30 to 60 area, your age area gives you a lot of work typically, which is what you're looking for. Obviously, if you're doing keto or ortho, you're going to look at a younger demographic. You want to have good visibility. I worked with a dentist that actually did really, really well, and I don't honestly know how he did it because he was in the top of a bank building. You couldn't see any signage for him. So that is one place where I guess you can overcome it, but that can be a really bad part. It's always good to look in the area during the day and the night to see what the difference is of the population of the area. And you definitely want to look at, a lot of times when I'm helping young dentists buy a practice, I always say, hey, what's your non-compete? And I almost always hear, oh, I don't think I have a non-compete. And I always say, I'll bet you do, so let's go back and check, because it's really critical that you make sure you honor that non-compete. Unless you work with somebody who you really think isn't going to, then that can be a conversation that you have. Okay, Rose. Another thing that you like to look at is that, again, depending on what you're looking for, is that there is $450,000 in collected production. So the difference there is how much did you produce versus how much did you collect. So what are the adjustments? That's important to add adjustments. And again, I don't want this to be overwhelming because these are things that we can absolutely help you with as you go through this process in your life, because it's an important decision, but we're going to just still go through them. So you want to look at the adjustments. How much did they produce, but how much did they truly collect? The collections are what matters. And then of those adjustments, how many of them are mandatory, meaning potentially insurance write-off, versus elective, meaning, hey, these are my art friends or my neighbors or my church group. You want to look at how much overhead they have. 67% is a good number to shoot for. Sometimes if it's higher than that, you can say, well, maybe the doctor has a lot of family members on payroll, that don't actually work there. So you can work through it to make sure the overhead is really, maybe some things need to be adjusted on that. Again, going back to the collection versus production, we like to see 91% of collections compared to 91% of production. I mean, as you all know, as you're going through and you're retaining all your patients, you would need at least 3 full days of hygiene per week. Could be more, depending on how old the practice is and how many active patients they have. But typically what we see is about 3 days, and then 1 or 2 front office people, a couple of assistants, and 1 or 2 hygienists. And 54 years of age, 10 to 15 new practice or new patients per month is kind of an average. It depends on how you practice. Sometimes we see a little less, and sometimes we see a whole bunch more. But it depends on each patient, and it depends on what you do. Okay, Rose. So some more statistics, kind of like what we've talked about. Again, new patients, it depends on the kind of work that you're doing and how many you're seeing. Sometimes we hear dentists worry about too much almost about new patients, and it's like, well, you did get a bunch. Where did they go? So one thing in production you can look at is 20 to 25,000 per staff member. Another one is to look at the production per operatory, which we usually see maybe around 250,000. Total overhead, we like to see at 63% or lower. Total staff compensation, we like, which does not include like janitorial or any of that. That's truly your front office, dental folks. We like to see that about 25%. And we do see that quite a bit. That's kind of, a very standard average. And facilities are usually about 7 to 9%. Marketing, we like to see 3 to 5% as that, for a healthy practice. Now, if you're a startup or if you're buying a smaller practice and you really want to beef it up, it might be a lot higher than that, and that's okay if you have a plan and it's a good plan and if you're spending your money wisely. Lab fees, we like to see about 8 to 10%, and that's typically if you do not have your own milling machine. It's obviously going to be a little lower with your own milling machine. Dental supplies, we typically see around 6% as a good benchmark. Office supplies are about 1 to 1.5%. Standard is about 325 square foot for an operatory. Hygiene production, we like to typically see about 1/3 of the total office production, at least. I mean, it can be a lot more if you're retaining your patients. Another thing you can look at in there is how much of hygiene production is perio. I mean, I think everybody knows that the top 2 liabilities in your dental practice are still perio negligence and your team. So it's good to look at the perio protocol too and see how much of that hygiene production is in perio. A good collection rate we like to see is 98% of what is being produced. Once you've found a practice, the way it starts then is that you contact us and we help you with the process that comes from that. And as Cord already mentioned, there is going to be a non-disclosure, which is important, and you can understand that, so you will be signing that. and then it's time to start gathering all the data that Cora was talking about too. And typically your broker is going to help you do all that. So you're going to want to look at the prospectus or the valuation, and you're going to want to look at the tax returns. And again, your CPA, or we can help you a little bit with that as well. You want to look at the practice management report, and you're going to want to look through the lease. And if the selling doctor owns the building, you will want to start talking about the future and what that looks like to you too. When your option to purchase is going to be. You have two big tools to run your practice, and it's your like QuickBooks or financial software and your practice management software. So that's what we're looking at there. Okay, Rose. So again, kind of going back to all the things you want to look at, and especially once you do get to the point where you're doing your own due diligence in the office by like viewing charts. But some of them are, yeah, you want to look at production. And depending on the scenario, you might look at production per provider. Maybe there's more than one dentist, maybe there's a specialist, there's more than one hygienist. You want to look closely at the procedures that they're doing to say, hey, can I bring in and do more that maybe they're referring out? But can you also do the ones that they're doing a lot of? If this is a practice that does a lot of implants, and a lot of money comes from implants, you better do implants. And again, you want to look at active patients. And you're going to be looking at the valuation done by the broker and the price. You're going to look at the team to know how many there are, what they're being paid, and if there are some that, the selling dentist knows aren't going to stay, such as a spouse or a child or something. And you're going to want to look at the fees. You're maybe not going to nitpick about every one, but you're going to say, hey, these are basically the top 5. So what? Periodic exam, 4 bite wings, $27.40 crown, that type of thing, and see what those fees are. And it doesn't mean you can't change them, but that's a whole other conversation as well. And again, you want to look at demographics to know the ages, and even you want to look at the zip code demographics. I mean, does the selling dentist live, 30 miles away in this different zip code? And if you see that a ton of patients are from that zip code, you may say, hey, maybe they're not all going to stay. And that isn't necessarily a bad thing. That doesn't necessarily keep you from buying it. But again, going in with your eyes wide open so you know what to expect and what you want to do. Okay, Rose. Typically, this is what the bank is going to want to look at. They're going to want 3 years of practice tax returns, and oftentimes they want your tax returns too. Sometimes they are going to ask for W-2s from staff pay. Sometimes they're fine with what they see on the tax return, but sometimes they're going to want to see the actual W-2s. And they're going to want to see some, they're all a little bit different, but maybe the last 2 or 3 years of P&Ls, and then obviously a very current one. And they're going to want to see the depreciation schedule and a list of the assets. Okay, and you're going to look at the accounts receivable aging report. And sometimes I've had, that I've helped dentists when I've helped them buy a practice. They're like, well, I don't really care what that is because I'm not buying the AR. Well, but you need to know if the patients are used to paying at the time of service. That's important. You want to look at production by procedure, again, to see how many of what they're doing. And again, production by provider. You're going to look at their fee schedule and any, your UCR fee schedule, as well as any of their PPOs. And what's really important that a lot of people forget is the AR aging credit balance report. So the top report is AR, but that's what we want to do is reduce that down to only debit accounts. And then you're also going to do a credit balance. Lots of times dentists aren't even aware that they have credit balances. And I mean, maybe some do. Maybe that's an office that's really good with prepayment. And so, well, hallelujah. But how do you deal with that? But a lot of times we find that credit balances are due to errors. Maybe they posted cash to the wrong patient. or maybe, you know, when you do a full mouth extraction and a denture, maybe they missed a few teeth that they forgot to post. So there can be, and EODs. I don't know if you've ever looked at an insurance EOD, but they're not easy to read. So you want to make sure and look at that report. And again, production by each code. Okay, Rose.
All right, analyzing the data prospectus. Sorry, I get tongue-tied on that one. Anyways, you want to get an idea of what this practice is about that you're looking at. You know, is this a blue-collar practice? Is this a white-collar practice? This is a practice like down at the bottom we'll talk about. They just see emergencies. Is it hygiene run well? Do they do a lot of removable? Do they do no removable? Look for red flags. You know, as Megan was talking about, does this practice do virtually no perio? Do they do some perio? Do they do a lot? Does the crown and bridge seem abnormally low or abnormally high? These are things just to consider. Is it a good fit? As Megan also said, procedures similar to what you do. You have to be able to do what you're buying. If this is an implant, fairly implant-heavy practice, you need to be able to do the implants, or these are procedures that you're buying that you won't be able to duplicate. Collection's about where you want to be. This isn't necessarily a right or wrong answer. This kind of comes down to, do you want a turnkey operation, or are you willing to build something up? Does your cash flow meet the demands of a lower collection practice to be able to take that on? Check out the insurance and PPOs. You're going to kind of be married to this a bit when you buy a practice. Staffing, is it adequately staffed? Are there family members as key staffing positions? Is the staff probably going to stay, or are they going to go? Or is there key staff members especially that are going to stay or go? Again, emergency clinic versus hygiene clinic. Look at how it's run. Number of operatories. Do you have reasonable level of growth there? You know, if you get boxed into a 3-op practice, are you able to have any growth at all? This is not necessarily a bad point, but it's things to consider. Does the population of doctor look reasonable? You know, 2001's average, but that's just average. For the area you're in, does it look, you know, does the numbers look good compared to what the income looks like? And does it take any capitation plans? Another thing to consider. Okay, Rose. Analyzing the data and tax returns. Do a comparison of tax data to benchmarks. And when you're looking at tax return, overlying theme here with this, when you own your own business, a general thing you try to accomplish is to pay as little in taxes as you can pull off. So when you compare benchmarks to tax returns, you just want some explanations. Frequently when you go through there, you'll see that there are expenses that they're taking, whether it be for family, like Megan was talking about, family members that are working there, or maybe not even working there, that they're paying, that makes the salaries look out of whack. Do they have they ran things like their car through it somehow? These are things you're looking for. Any anomalies you have, you should ask the seller or broker. They should clear that up for you. Look for a depreciation schedule, see where the assets were purchased, where is that running. Reconcile the collection numbers back to the practice management reports. This is important. You want this to be close. It probably, not very often, is going to be exact, but you want it to be close. If there's a big discrepancy here, that should be a head scratcher. Look for trends in collections. You know, is this practice headed up? Is it headed down? Staying similar? Look for the big discounts. And of course, you know, again, on the professionals, you're going to need to help you. Have your accountant take a look at these returns and see what they think of them. Okay, Rose. Won't spend too much time on this, but this is a sample tax return. If you're not used to looking at one for a company, and this happens to be an S corporation, they're a lot more detailed than it is for a personal return. Over to the right there, it's showing that's that statement 2. That's what would be on that. But this is the kind of sample that you'd be looking at. Okay, Rose. Ratio analysis on the tax returns. You're going to break this down by percentages. And again, these are just questions to ask if you see discrepancies. For example, in this example, the staff compensation is bigger than the benchmark. But again, is this family members? Does the spouse work there, and is the spouse getting essentially overpaid for tax benefits? The facilities. Does this doctor own the facility themselves, and is this a way they're deferring taxes by funneling in a much bigger than normal rent that needs to be paid to basically be able to defer some taxes? Marketing. You know, here's a great example. A lot of well-matured practices, you'll see little marketing. This is actually an opportunity as far as I'm concerned, because if they're doing pretty good numbers with no marketing, what could they do if you had some marketing? These are avenues you can exploit. The lab fees, you just want to see a normal range here. So if they're doing Crown and Bridge, you know, way too high, it actually can be a red flag. Are they maxing out everything or doing procedures you can't do? Way too low, it's not necessarily bad, because it could be opportunity of just a dentist that's kind of got tired and it's kind of lazy. Dental supplies, office supplies, you just want to see them in the normal ranges. Okay, Rose. Analyzing practice reports. You want to take the aging report here, and the big thing is by taking the total AR monthly collections and you divide it, you want to see that range of 50 to 100%, because much like Megan was talking about, if this number gets way above 100%, this is a practice that's not collecting what it's producing. Even if you're not buying AR, like Megan was talking about, the problem is these patients are used to not paying, and this will be an issue for you. So be aware of that. Production by procedure report, again, you're just trying to see where this money's coming from. Is this a lot of hygiene, no hygiene? In this case here, you know, as they point out in this slide, is the scaling and root planing being done? Is it being done at all? Is it being done in an adequate amount? Production by provider. How many providers are there? Is the hygiene kicking in its fair share? Is it not? Fee schedules, are they high, low, just right? Just like that saying, you just want to be aware. Credit report balances, again, are they there? Why are they there? You know, as Megan said, it could be a good reason, like this practice happens to be exceptional at getting prepayment discounts. That's a great thing, but you have to be able to deal with that. Are the credit balances there because it's relatives, friends, or staff? Again, not a bad thing. This is stuff every dentist does, but you just need to be aware of it, and how are we going to deal with it? Next slide, Rose.
So making the offer, you're obviously going to be talking with your broker to discuss, or your consultant, whatever, to discuss the offer. Lots of times I know it's human nature. We all want to offer a lot less and see what happens. But this is an area where you want to be pretty careful. Doesn't mean you can't offer less, but I'd have a definite reason. You know, like I worked I was helping an orthodontist buy a practice, and it happened to be in an area where there was a lot of military, you know, and, you know, so it's like, well, let's see how many military they have in here, and if there's a lot, then maybe that's a reason to offer less. But, you know, you have to remember that this is a practice that this dentist has built. It's their baby, and you'll know that one day too. So I have seen some sellers that, you know, are so offended by a lowball bid that they'll just take it off the market, or just take it out from under you. Again, you'll have your letter of intent that we talked about, and it'll just list out a few of the things that you can see there. And sometimes not all of them, but that's, again, we're kind of working with a dental-specific attorney will help you with what needs to be on the letter of intent and what doesn't. Okay, Rose. Like with, you know, regular real estate, when you buy anything, it's based on contingencies. So obviously it's going to be based on you getting, you know, financing and the details of a lease or a purchase of the building. And again, those are important things that your attorney and broker or consultant will want to look at to make sure that you're covered. And the LOI will also say, hey, we're going to give you a certain amount of time to do your due diligence so that you can come into the office and look again potentially and spend more time, look through charts, all that type of stuff. And again, with auditing a patient chart, whether they're actual paper or electronic, you know, we're happy to provide some tips on what to look for because you probably haven't had to do that before. And again, all your advisors are going to look at it and how the assets are going to be transferred, and you're going to look closely at the seller's non-compete, and again, that's stuff that the attorney and broker and consultant can help you with. And it'll also potentially say maybe how long you want the seller to stay. And, you know, we could talk a long time about just that one thing. Sometimes buyers feel like if that selling dentist doesn't stay around for months or months, I feel like I'm in trouble. And that just really isn't always the case. So you just have to decide what works for you. And you also have to, I mean, we've seen plenty. I mean, you guys are independent. You want to do it your way. So sometimes we see that those staying on, the seller staying on doesn't work, but we see plenty that do work. So just something to look at. And also if the seller is staying on and they're, you know, producing, how are you going to pay them? And is there enough money for you both to be seeing patients and being paid? And again, that's stuff that we help with. So, okay, Rose. And this is basically, you know, I hear a lot of, I'm going to kind of sum this up with look closely at everything and talk to the broker and your trusted advisors. You want to look, even if it's $1 million practice, how much are they really taking home? Sometimes when dentists talk on golf courses or at the bar, they just talk about production. Well, that absolutely doesn't tell the whole story. So you want to work with your to say, hey, is this $1 million practice? Are they only taking home $400,000 or are they taking home $700,000? So that's what's really critical is what you're taking home. Okay, Rose. Corey, did you want me to take that one?
Yeah, I think this one was yours, Megan. Is this all right? Or I can do it if you want me to.
Yeah, no. So again, you know, we're going to look at a lot of different things. We're going to look at the collections. We're going to look at the adjustments. We're going to look at the assets. We're going to look at the tax return. We're going to look at all these things, like how much is the owner taking in salary. But again, that depends on what kind of entity they have their practice under, if they're taking a salary, or how they're paying themselves and how they're paying taxes. So again, we just want to really look at all these expenses. Another expense to look at too is retirement. Is this a practice that has a retirement plan in place? And if so, something to think about as far as what the team is used to. Doesn't mean you can't change it if you don't need to, but how are you going to be prepared to have that conversation? And typically, we wouldn't have the new dentist typically take over the seller dentist's existing plan because you're probably going to be a lot different. So the same plan isn't going to be, their plan isn't going to be the right plan for you. So that's another thing to look at too, and what other benefits besides retirement they may have. So again, how much are they producing? But let's move to the very bottom line. What are you taking home? And at that point, then what are you doing with that? So again, that's where all your trusted advisors really come into play. And there will also be a value placed on the equipment, and your CPA will look at the depreciation schedule there. Okay, Rose. So Corey, this is probably your thing. There's 3 primary methods we use to evaluate a practice, and Corey's going to walk through the 3 and then how we actually blend them to come up with a final price.
Yeah. Give me a second here. I'm having trouble seeing this, but
That's okay. We can keep going here. So again,
Get that moved. Hey, there we go. Super. Okay, valuation methods. Basically, when you do these valuations, there's 3 different methods we have to look at. You have the book value, which is, or I should say the market value, excuse me. The market value, which is again kind of the rule of thumb, it's the 60 to 80% you always hear about. That is weighed in. We have asset value. What is the book value of the practice itself? What's the goodwill? What's the assets? What is the current value of those assets? But the one that really comes down to it, and the most important one, is the income method. This is what the banks care a lot about. What is this practice able to generate income-wise? We use a variety of methods there. We take the adjusted net income. We have to do a capitalization rate, which is a way we figure it back, and we get a capitalization value. And then when we figure these out, we'll end up having 3 different figures, which we try to come to some kind of consensus. And I think that's on the next slide if I have it. Rose, go ahead and change that if you could. Okay, there we go. So we have all 3 methods. We average it out. We come up with a final value. And this is an art and a science to do this, and we have a lot of experience doing this. Next slide, Rose.
so again, you know, we work with our dentists and say, hey, here's where this value came from, and typically it's going to be a good price. So again, we can still talk about what do you want to offer. Again, you can go lower if you have a valid reason, but I wouldn't do that just to play the game, because again, this is a very personal thing that a dentist has built for potentially 30, 40 or more years. We often see closings within a couple of months, but it just really depends. Sometimes, depending on certain areas of the country, there can be competing bids. You know, every little area is, or large area is completely different. So at that point, if the selling dentist is looking at multiple buyers, that's a chance for you to shine by including your CV, talk about what you've done, get your bank letter to say, hey, here's what we're willing to do. You know, it's maybe not final, but they're going to give you that letter. And just for that dentist to get to know you a little bit potentially and say, hey, this is the one I want to be in my practice. There it is. Typically, like we first talked about, that a lot of banks, you know, I wouldn't let anything keep you from talking to the dental specific banks about what you're able to get and what's going to happen. But in general, they like a dentist to be out of school with two years experience. And yeah, I mean, anymore, I've helped with tons of transitions where the buyer might have $300,000 to $500,000 in debt. It just depends. But if you have bills, make sure you're paying them on time and keeping up with that. And yeah, as you can imagine, credit card debt is one of the worst debts you can have. They're going to look at your home mortgage if you have one. Something to think about too is to talk with the bank too if you're at a point where you're ready to buy your practice and a home, to figure out how that's going to go. Lots of times people say, well, let me get the practice done and then I'll buy a house next, you know, in a few months. Well, sometimes you have to wait a couple of years, which is fine. You just need to know that. Again, going in with your eyes wide open. And like we talked about before, they're going to want a couple of years, 2 to 3 years of tax returns and personal financial statements from you and the selling dentist. We do see the environment tightening up a little bit and interest rates are going up a little bit, but man, it's still good out there. It's still really good out there. I talk a lot with the banks and there's lots of money for you. sometimes they'll have the seller carry back, especially if you're buying the building as well. And sometimes, like I worked with an orthodontist once, and he kind of did his homework and got the map out and said, hey, here's where all my GP friends work. So put my finger in the middle of all that. Here's exactly where I want my ortho practice. And funnily enough, there was already an orthodontist there. He went in and talked to this guy, and he bought his practice. So at that point, you know, that seller is going to essentially be asking more than it's worth because he can. So at that point, that might be where, you know, the bank's going to make a loan on a certain amount, but the seller is going to have to provide the, you know, the financing for the rest of it. But again, for all your advisors come in to say, hey, does this look good? And how is this carry back right now? Sometimes this building, they might ask for 10 to 20% down on the building. But again, it just really depends, like everything we've been talking about, I guess. But we help, you know, make that happen and what that's going to look like. And as we said, there's tons of dental-specific banks that are happy to fund dentists. Doing your due diligence, again, we've talked about that, and again, we help with the list. And yeah, anytime you can, you know, I've seen some people take all day, or I've seen, you know, the last few that I've helped with have been like 2-3 hours maximum, you know, because at the point when you're in the office, you've already got a lot of information. So it's basically looking to say, hey, how does this doctor chart? Is everything documented well? You know, what does the diagnosis look like? What do the x-rays look like and compared to diagnosis? And you might even look at a new patient chart, or, you know, the last 5 new patients to look at that. You might look at the last 5 endo patients to see if they followed up with a crown or not. And obviously you're going to look closely. You can have an equipment dealer check it out, or obviously you know what works for you. So it's truly important to, I mean, if you're left-handed and the equipment's old, it may not be easily changed to facilitate a left-handed dentist. So you just, and that's okay, but you just need to know what the cost is going to be. You just know, hey, can I sit down and use where this delivery system in the place that it's located? Okay, Rose. Anyway, we talked about quite a lot of this, but it's just important to look at everything. And some of what we have on here in covering skeletons is stuff that you're going to want to do when you go in as the new dentist. You're going to want to look at audit reports to do credit adjustments. You're going to want to look at all the adjustments. You're going to want to have a daily deposit reconciliation in place. And a lot of times that's a huge area of embezzlement, but it's also a huge area of error. Not everybody knows how to do a daily deposit reconciliation. And you know, we absolutely have a form for that to help. Always good to look at your due sheet to just say, hey, did everything I do today get posted? Just like the hygienist should be doing it. So again, some of these are kind of things you'll just definitely want to do going forward. And embezzlement, I don't want to scare everybody, but there is just a ton of embezzlement. And it's just so easy. But again, we have, as long as we've been doing this, we have all kinds of tips and tricks to try to reduce that issue. One of the biggest ones I've ever seen, it was just kind of interesting. It was kind of like what this is telling you. This is a person who's been there for years and years, doesn't take a vacation. And when we found out all the embezzlement, the doctor said, she's been with me 20 years. And we said, I know. And he said, well, do I have to fire her? And I thought, oh my gosh, well, no, of course you don't. But so anyway, don't want to scare you, but there are things you can do to make sure you don't get embezzled. Okay, Rose. And again, we've talked about some of this, but you do want to look at your active patient count. And sometimes what the system, you know, EagleSoft or Dentrix or whatever it's going to say is the active patient count may not be correct because it's only as good as what the team put in there. You know, somebody dies, somebody moves, and they don't update that. But you still can kind of verify it by how many people came in for para maintenance and for their regular proceeds. Again, staff issues, you're gonna find out a lot about that, and you know, that's where even we as brokers and consultants can help with what do you do about that? Like, how do you make sure that they understand what you want for a schedule and provide them with tips and tools to be successful in filling your schedule and making sure production's where you want it. And again, a lot of this is stuff that we would guide you to look at. You know, these are standard things really that every dentist should look at, and I don't want it to be overwhelming, because once you're in the habit of it, these are things that just become natural, and you do them without thinking about it. And you need to know what kind of equipment problems are there, again, so that you can potentially get, you know, more financing from the bank right away. Again, we don't want you spending a lot, but we also can't have you in there and not being able to produce. Okay, Rose. So back to some of the agreements, like the letter of intent and the non-disclosure, but there will be, you know, work closely with the attorneys, because there will be a purchase and sale agreement. There might be a separate short agreement for the accounts receivable that you're purchasing, and the lease assignment, the covenant not to compete, how the HIPAA issues transfer, and if there's any kind of employment agreement needed, if the seller is going to work, you want to make sure that you set that out properly too. You don't want anything there to go south. And the actual bill of sale. So these are some of the actual agreements, but again, this is stuff that the attorney and brokers and consultants can sometimes help, so you're comfortable with what's happening if they do need to be in place. And we say that even if it's a father and child or siblings or whatever, it's like, hey, these agreements still have to be in place. We want you people to be eating Thanksgiving together next year. And one of the things that you'll start thinking about too is, you know, we've talked about the purchase price, but redo work. You know, if some of the crowns and fillings that have been done need to be redone within a certain period of time, how are you going to do that? Are you going to do it and the seller pays you, or is the seller going to be in the area and they're going to come in and do it? Yeah, and anything that's in progress, depending on what type of procedures, you know, are being done, how do you handle that? And there's no real right or wrong answer here. I mean, we know what we've seen in the past that we can share, but just so that you work it out. Same thing with those credit balances that we talked about. And prorations will have to be done on all kinds of different things, whether it's a utility bill or, you know, whatever. The patient letter is really important, and typically that's sort of done together, the buyer and the seller, and we certainly have examples of those to use, so you're not starting from scratch. But you both want to be happy with what that says, to say, hey, you know, patients, I've enjoyed working with you and taking care of you for the last 30 years, and now I've found the exact right person to come in and continue that quality care for my quality patients, blah, blah, blah. And they'll actually, the agreements will also have a list of all the equipment and any assumed contracts and a closing date, of course. And again, it will also include the covenant not to compete. And, you know, we would talk to you about what is pretty standard and typical, and if there's a reason that it should be more than usual, then we can talk about what that should be. And, you know, whether this dentist wants to work at the selling dentist wants to work at a school or wants to help his pals out that want to go on vacation. You just need to know that type of stuff so you can have the details in there. And a lot of times, you know, you buy the AR because it automatically gives you money coming in as well, but sometimes not. And then typically what, you know, the buyer will do is collect it for the seller at a charge, at a fee. And for the AR, it's discounted as it ages. You know, anything over 90 days, you're not going to get much. So that's where, again, the trusted advisors come in and help you with that type of stuff. It's good to look at the PPO discounts because a couple things you're going to want to, if you're going to be on them too, which sometimes makes sense, at least at first, is to make sure that you're credentialed with those folks so that you can come right in and start producing and billing insurance. And sometimes that can take a few weeks or more. And then at some point, you can look at them closely too and say, hey, maybe I do or don't want to continue on these. And that's, stuff that we can help you look at too to make that determination. And again, the lease assignment, it's important that there's that opportunity to assign that lease, and then of course the official closing. We talked about the patient letter, and really the employee announcement is important. And again, a lot of these things here are things that we're going to help you with because you've never had to do. How do you talk to? I helped a buyer just, I don't know, a couple months ago, and I said, uh-oh, so tomorrow's a big day. This is awesome. You're going to meet the team. What are you going to say? I'm like, I don't know. I'm like, well, let's come up with a plan because it's going to be important. And here's what I hear sometimes that they ask. Maybe you're going to say, hey, Sally is really difficult to get along with, or I haven't had a raise in 5 years. Here's how to prepare yourself for those kind of questions and how to meet with them and proactively get them on your side to move forward. And, there's no magic number, but maybe 6 to 12 months, keep everything pretty much the same, depending on what we're exactly talking about, and then start to make some changes. And again, it's important how you make those changes and what the verbiage is, how you present it to your team, but also how your team presents it to the patients if it affects them as well. And you can look at staffing options too. You have to get your software license transferred. There's sometimes a fee for that, but that's okay. And then again, working with the dental specific bank, they're going to be able to help you say, hey, here are the things that you're going to need. We can help you with your merchant fees maybe. We're going to get your business account set up. We're going to get you your business credit card, all that type of stuff. Okay, Rose.
All right, the cost of delaying the purchase of practice, and why should I overpay for a practice? This guy looks serious. Nobody wants to overpay for anything. Let's take a look at it. Next slide, Rose. All right, 2 good doctors graduate together from the dental school of $500,000 debt, and it's getting there. Go creditors, I like that. There's Dr. Now Starts Future, and there's Dr. Wait, Play It Safe. Those are 2 different guys right there, aren't they? Next slide, Rose. All right. Dr. Now purchases a practice exactly at the 2-year mark. He's done working as associate. He's got his speed up. He's ready to go. Year 3, the first year that he's out, Dr. Wait probably will make more money because Dr. Now is going to have to put some money into his practice. So yeah, he took a little bit of a hit in that year 3, but let's see what happens as we go on here. Next slide. All right, so the years keep on going by here. Year 4 on, guess what? Dr. Now is actually making more money. In fact, quite a bit more money. Year 6, Dr. Wait finally gets around to buying a practice. He's hunted for his unicorn, and maybe he's found it. Maybe he's decided the unicorn isn't out there. He's just going to finally settle down and get a practice. And over the course of those 3 years, you see that the earnings, that it comes down to $176,000 in this example, that Dr. Now made more than Dr. Wait. And here's the key thing. Dr. Wait will never recoup that missed income. Next slide, Rose. Yes, I said he'll never recoup that $176,000. It's $176,576. And when we throw that number out there, we're even ignoring the fact that interest rates will go up, and they will go up. They're really low right now. The bank fees will increase. Price values on practices, just inflation alone, will go up 3%. We're ignoring the time value of money on this for paying practice off 3 years earlier. It ignores the fact of what you do with that extra money that you have it, and the fact that you pay off your practice sooner. All these real costs would make that $176 some odd dollars even higher than it seems. Next slide, Rose. All right, so we're going to get an example here. Doctor loves to haggle. This guy, I'd love to see a dentist dressed in this coat and hat. That would be awesome. Anyway, Dr. Loves to Haggle, DDS, has decided to purchase a practice. He found a practice of sale he likes on OMNI for $600,000. Let's see what Dr. Loves to Haggle does. Next slide, Rose. He negotiates, and he comes to conclusion this thing is worth $575 max. He's a shrewd negotiator, and he says, this is it. This is all I'm going to offer, $575. Next slide, Rose. Unfortunately, seller is Dr. T. Wad, type being his first name, and he replies, $600,000 to firm. So Dr. Haggle decides, hey, I'm not overpaying, I'm moving on. So he keeps on working as an associate, still looking for his unicorn. Next slide, Rose. So if it takes 1 year to find his practice here, okay, money saved. He saved his $25,000. He invested that, the great banks are willing to pay, and he got a whole $125 out of that. In the time frame there, we have inflation hitting. So that $600,000 or that $575,000 practice is now the $592,550. Interest rates have finally gone up, which they're eventually going to do. Banks lending practices tighten up, which it will happen. So his cost of savings actually ended up being a loss of $19-some thousand. Next slide, Rose. What about salary? Okay. Dr. Loves to Haggle missed out 1 year of salary as an owner, looking for that unicorn. He actually misses out on the difference in salary over several years, but to keep it simple, we're just going to say 1 year. So $50,000 is roughly what he probably missed difference not being an owner. He will never recoup this either. Next slide, Rose. Total difference between those, almost $70,000 that he cost himself because he didn't want to overpay that $25,000. Now, we're making light of this situation here. Nobody wants to overpay. You know, and it's part of being a broker. That's what we're looking out for your benefit on. We're going to look out for your back of not being a ridiculous thing. But when we bring these slides up, sometimes we see people let really good deals fall through over really small amounts of money, and that's just sad to see. Next slide. So why purchase now? Whoop, one back one. There we go. We do have once in a lifetime interest rates. Interest rates are low. Banking climate favorable. These banks are really willing to work with buyers. You know, this has not always been the case. It could turn into a less favorable climate. That's quite possible. The longer you wait, the more complicated your life will become. As a 40-some-year-old guy, I can tell you this is the truth. Life is much easier before you have a wife, a kid, or a husband. Don't mean to be gender biased there. Children really complicate the issue. A home, standard of living you get used to. It gets harder. Next slide.
Okay, thanks, Corey and Megan. That was awesome. A lot of information in a very short period of time. I think the last time we did this seminar, I think it took about 3 hours, but we tried to get through it as quickly as possible. So thanks, you guys. Any questions from the audience out there? You can either go ahead and unmute yourself and ask them, or just write in the chat line. So while we wait for any questions, I can ask a couple. So what advice do you have for a dentist who's just out of school and getting an associate position? And this primarily relates around non-compete agreements. So Megan, you want to take that one?
Well, if you're speaking correctly, you do want to really think, as we mentioned earlier, it's like, where do you really want to practice? And if you know a specific place where you want to practice, make sure that you're not going to ruin that by working somewhere down the street, and then you have a non-compete that's going to keep you from working where you want to work. So sometimes dentists will consider that and say, hey, I do want to work in this specific city, so I'm going to commute like 30 miles to another practice so that when I have the money and the right practice comes available 30 miles from here in the place I want to be, I'm ready and I can go forward.
Okay. Okay. Great. Another question that I had is on purchase price allocation. So when you purchase a practice, say it's $500,000, that $500,000 doesn't all go towards purchasing equipment. There's a piece of it goes to goodwill, a piece of it goes to the non-covenant, the covenant not to compete, and a piece of it goes to equipment, etc. Corey, do you want to talk a little bit about that as far as allocating for buyers, why it's important to make sure you get it allocated correctly?
This all comes down to tax issues, and the IRS has done a good job of making sure somebody pays for this. So in a nutshell, from a buyer's perspective, and jump in here if I'm wrong on this, Rod, but you want to have as much as you can be on equipment. The seller will want to have as much as possible on goodwill. Now this comes down to a negotiation process, and the accountants on both sides will kind of work back and forth on this. The reality is you're going to end up coming to a compromise on this because the IRS won't let both people take a big tax advantage on this. So it is something to negotiate out.
Yep. Okay. Yeah, the only thing I would add is on purchase price allocation, there's a covenant, there's a piece of it's a covenant not to compete, which is typically about $10,000 to $20,000, and CPAs even get this one messed up because the way that the covenant not to compete is treated, it's treated as ordinary income tax, not capital gains tax. So that one just came up actually recently and said, oh, my CPA says it's capital tax at capital gains rate, and that's primarily for sellers. But I had to show him online that no, I'm not a CPA, but it's taxed at the ordinary income rate, even though it's kind of a goodwill intangible thing. So, okay, so this one's for both of you. So what's the number one thing to look out for when you're buying a practice, or just give what advice would you give? The biggest piece of advice that you would give to a potential buyer, Megan.
Oh, that's hard. One? Geez.
I'll give you two.
Well, see, this is where we get into hours and hours right here. I would say, honestly, where do you want to be? And it doesn't mean that you can't sell your practice and move back home or back to wherever, but I think really deciding where you want to live and practice is important. And then I hate to add one more, but I can't say enough how important it is to get your trusted advisors. I know it's a time where you're worried about money, and we're all worried about money always, but I've just seen so many things go wrong if you don't have a dental-focused broker, consultant, CPA, and banker. They're worth their money in gold, and then they all work well together to have your best interest at heart.
Okay, perfect. Corey, same question.
I would add in, what Megan said is absolutely true, but I would also add to that, have an open mind of what you're capable of, what's a potential. If you look at this like a house, are you willing to do a bit of a rehab job? Are you not? Is it really critical to you? Do you walk in turnkey? But you have to weigh that with, do you have the income requirements to take on a rehab project? These are questions to ask yourself sooner versus later, because the more open you are to practices, the better opportunities you will find.
Okay, just and my advice would be to don't wait for your perfect practice, because they really don't exist. It's like buying your first car. Your dream car is the I don't know, the Maserati or the Ferrari or something like that. But when you buy your first car, you don't go for your dream car. You go for a car that's kind of got the training wheels and the dents and the dings in it. So when you're buying your first practice, don't go for the $2 million practice or don't wait for it. I've had buyers, and I still have buyers who I've known for 10 years, and they still haven't bought their first practice because they're waiting for that dream practice to come along, or they can afford it, or they can. It has this number of patients, this type of equipment, this location, this visibility, and all these different variables that they keep looking at. And I talked to him. He's still making okay money as an associate, but it's like I told him, like, if you'd have bought that first practice I showed you 10 years ago, it'd have been paid for. It'd be worth $1.5 million, and you'd have that much money towards retirement, and you could retire sooner. But now he's still waiting for that dream practice. So and just because you buy a practice doesn't mean it's the last practice you'll ever buy. You can resell them. So you need to get out there and get into the game and buy a practice and build it up. And if your dream practice comes along, sell the one you're in and then go buy your dream practice. It's doable. So you just have to play the game a little bit. So.
Well, yeah, and going in eyes wide open. Lots of times when I've talked to dentists after they, maybe we didn't help them purchase the practice, but talk to them later, I hear things that they just get so caught up on, like, well, there wasn't, 6,000 active patients, and there wasn't. And I'm like, okay, probably when you looked at their collection, you knew they didn't have 6,000 active patients. So yeah. Let's put this in reality and let's move forward, because the exciting thing is there are a lot of areas of opportunity, and here they are. It's this, and here's how we're going to help you and your team to maximize these. So just going in with your eyes wide open, I think, is important too. And like Rob said, just create what you want. Yep,
absolutely. So. Okay, well, I think that's it. Thanks, you guys. That was a lot of great information. So everyone keep your eyes and ears open for future webinars. We're going to try to do at least a monthly one on different topics. If you have any other topics, feel free to shoot those over to us. I think you probably have our contact information, or you can go to our website. It's omni-pg.com. And I think our contact information is on there. There's a survey that I think will be sent to you after this webinar is over, and if you can fill it out, we'd greatly appreciate it. If there's other things questions you have or things like that, you can reach out to Corey or myself or to Megan. So, all right, that's it. Everybody have a great weekend, and we'll talk to you soon.